And of course, the extreme would be them to come just feel this fair value right there, which would be very lovely if they do that, because then we know there's nothing else we're looking for on the upside, right? So we'll have enough steam for the market to push all the way into this internal range liquidity if we tap into this fair value up there. Hey yo, what's good, everybody? This is your man, Prof Zones, and Prof is not for professor, but for profits. Oh yeah. Welcome to episode 9 of GroundUp Breakdown. And as you know, guys, it's literally been this is the 9th week that we've been delving deep into AudUsd, right? So hopefully, guys, so far for this journey, you have learned a lot because we are nearing the end of season 1. Right? A couple episodes left, and yeah, we'll basically finish season 1 of GroundUp Breakdown, and we're leading into season 2, which is going to be more insightful because we will not be just focusing on one pair. So, okay, with that said, guys, just a quick little recap. As you know, what I said on episode 8 is that the Bears are in charge, and they still are. The Bears are very much in charge. And as I said, that the only thing that is going to hinder the Bears is simply because we've just swept this liquidity, and the Bulls might want to get in to tap into some fair value gap that is resting around about here, right? And then, of course, as I said that, but the lower time frames will guide us. And as you can see on the daily, it was very evident that this is the liquidity that we've swept. This is the liquidity that we've swept, and all we wanted for the market to actually close above this liquidity. And then after that, we know that we can easily head into this order block right here, or the extreme. The extreme would be this fair value gap right here. And as you can see, we have just tapped into this fair value gap a little bit. So things are actually moving quite well. So yeah, guys, that is it for the recaps. And also, the link is in the description, guys. I am a co-host on Monday Market Mapping with my host Tumelo Mgomezulu, aka Scooby from OpenEye Forex. And we have a free group where I analyze 3 pairs, he analyzes 3 pairs, 2 different styles of trading. But at the end of the day, we are very knowledgeable about what we do and what we say. I don't want to talk much, just click that link in the description and join our Telegram group. We just hit 300 subscribers, and of course, road to 500. So yeah, guys, with that said, join me on Monday Market Mapping as I talk a little bit not really in depth, but just to give you a closer perspective of AudUsd, gold, and USD CAD. So yeah, guys, with that said, just click that link in the description. Join me on Monday Market Mapping. With that said, guys, let us get into this week's forecast of AudUsd. So yeah, guys, let us just take it from the daily time frame, right? Let us take it from the daily time frame. As you can see, this is our internal range liquidity, which we have just tapped into, right? This is our internal range liquidity. We have a fair value gap there, of course, right? And we also have our internal range liquidity, right? So it's possible for them to want to actually tap into 50% of this. It's very possible, right? Depending on the momentum of the bulls. Because above the 50% of this fair value gap, there are quite a lot of sellers, right? So when they do tap into this range, then we know that we will be looking for strong sells to the downside. But the lower time frames are actually showing us something else, and we'll get there. So as we know, the market moves from liquidity to fair value, from internal range to external range, and sometimes external range to external range, right? So since we have swept this liquidity right here, sorry, let me just draw that properly. Since we have swept this liquidity right here, right? Since we've swept that liquidity last week, we know that the market was attracted to a fair value, which that's where it already already tapped into just a little bit, right? And now all we're looking for is for some bearish signs on the lower time frame. And how are we going to get that? We're basically going to get that by changes of character towards the downside, right? Towards the downside. And in price action terms, we basically not now looking for higher highs, but we're basically looking for lower highs and lower lows in the market. And the lower time frames will actually tell us exactly what's going on. So let's move into the H4 just so we can get a little bit more perspective. As you can see, guys, we are in the H4 time frame. Let me just move this to there, because that's where it needs to be, right? As you can see, guys, we're on the H4 time frame, and this fair value still looks very, very much beautiful. And we've been moving to the upside quite nicely. We're still forming higher highs. So ever since this lower low, we basically formed higher highs, higher highs, higher highs, right? So we're still forming higher highs on our H4 time frame. So the bulls can still want to push this market up and use the momentum that they've been actually gaining this whole week. But seeing that we've had consecutive bullish candles, this whole week was just bullish candles, this whole week. So the bulls are very, very much strong, right? So they might easily want to carry on their run. And if they do, we already know that they're carrying on their run to the 50% range of this fair value gap, or at least close enough, right? If the bulls keep forming higher highs. So now let us look into H1 and let's see what H1 is giving us. So now H1, we've had our first change of character, right? Our first minor change of character, because of course the extreme low is usually daily lows, right? So I'd say that first change of character is around about here, right? Why am I saying that? It's because the market formed a higher high, came back down to form a higher low, and then when it pushed back up again, it failed to break above this higher high, and then when it pushed back down, it formed a lower low. So you see, with that said, it needed to leave a fair value gap. And did it leave a fair value gap when it done that? Yes, it did. This was the fair value gap in that hour time frame. Tapped into that fair value gap, and now it's showing some bearish signs. So what can happen? What can happen now is that if the market drops on Monday, then we already know that it's probably just going to want to fetch this liquidity below here, right? Fetch some steam right below here, tap into this order block, and then continue, if the bulls are still strong, up into that fair value gap, 50% of that fair value gap that we were talking about, right? But if the market shows a lot more steam to the downside, as if it breaks this liquidity right here, sweeps it, and goes all the way into this small fair value gap here, then we know after that it's going to be hunting for liquidity, right? And liquidity will be towards the upside, of course, right? Towards the upside, sweep this liquidity. And if it fails this high again, then we know that, of course, that the market is going to now create another change of character to sell all the way into this liquidity here. And that on its own will now be basically the bears showing us that they are starting to gain strength. You see, so it's going to create a little bit of some accumulation, right? Because we've been moving all the way up. So that's how we're going to see that the bears are in, right? That's how we're going, that's how we're going to see that the bears are in. So now, let me just delete that. So now basically, since we have this minor change of character right here, the bears are starting to show us some form of strength, right? Why? Simply because every single day from Monday, we have been easily forming high highs without any hindrance, easily forming high highs. Even when GDP news hit, the advanced GDP news hit, yes, it pushed the market down, but it couldn't even break this low, right? And then it kept forming higher highs. So we also know that if the market pushes down, it's probably still going to want to respect this low. But if that low is violated, then now we know that the bears are starting to gain some steam. Because if it's violated, then of course it's going to be heading to this fair value gap right here. And once it gets that fair value gap, it's going to be looking for liquidity, which is all going to be resting all the way up there. As the price comes down, right, it's going to be generating liquidity, and more liquidity. And that liquidity will be taken before the market gains more steam to push down, right? So basically, that's what we are looking for. We're looking for the bears to be a little bit more stronger this week, right? Why? Simply because we've already tapped into that daily order block, right? We've already tapped into that daily order block and fair value gap just a little bit. So as you can see, as soon as we tapped into that fair value gap, because this represents that daily fair value gap, the market started now to show some steam to the downside, right? So now we're looking for more confirmations so that we can sell it. We're looking for more confirmations of the bears. So with that said, guys, let us move into the M15 time frame. Right? As you can see on the M15 time frame, what I'm talking about is actually way more clearer on the 15-minute time frame, where the market formed a higher high, lower low, left a fair value, tapped into that fair value, and sold off. Right? To now change the character, market structure shift. Now it tapped into another fair value right here, and it's starting to show some signs of bears. Right? So all we're looking for is the bears to be a little bit more stronger. But there is a chance of this liquidity being swept, all of this liquidity being swept, so that the market can tap deeper into that fair value gap. Why? Because the bulls are still very energetic. As you can see, as you saw in the daily, guys, every day for this past week, the market was very bullish without any hindrance, right? So the bulls are very much energized right now. But as you can see, the bears are starting to show some form of interest in this market. So basically that's what we'll be looking for this week, guys, is for the bears to show some more interest in this market. And if you do not know how, of course, just contact me and tap into my mentorship, and then I'll show you how we basically go about this day by day, how we mark out everything day by day in terms of getting these trades and basically being in the ebb of the flow of the market. So yeah, guys, with that said, this is all for this week on AudUsd. Of course, if you want to tap in a little deeper, as I said, tap into my mentorship. And if you are interested in getting to see more of a breakdown of this pair, gold and USD CAD, make sure you click that link in the description of Monday Market Mapping, as I am a co-host on that show. And yeah, guys, this week we've been killing the market with free analysis. So yeah, do tap in to Monday Market Mapping. With that said, guys, you know what we need to do. Let's plan the trade and trade the plan. Tango.